First Bank of Nigeria's gross earnings were 14.2% higher than the 122 billion naira posted in 2010, while profit before tax grew by 12.8% to 35 billion naira. Joining us now from our studios in Lagos is the company's Group Managing Director, Bisi Onasanya. Thanks so much, Bisi, for joining us this afternoon. While speaking to a few commentators this morning, the market's certainly impressed by the gains they've seen in your key income lines, and I've gone through a couple of them in that intro. So take us through the story behind your strong earnings growth.
Thank you very much. As a management, we went all out to address the shortcomings that we noticed in the bank's operational systems, and we embarked on a transformation journey when I took over as the group CEO. Now, the story behind this success is based on a deliberate management of our interest expense. You would notice that we've been able to increase our deposit base to 1.9 trillion naira, little bit short of 2 trillion naira. And 83% of that component is made up of low-cost deposits. So we were able to drive down interest expense. In addition to that, we were able to also sweat the assets and improve the yield on our assets through efficient treasury management and better relationship management. And lastly, we went all out to drive up non-interest revenue, and our target is to make it at least 25 to 30% of our total revenue. So it's a combination of factors deliberately carried out based on the deliberately crafted strategic plan to drive up revenues and become the leading profitable bank in Nigeria. Well, and we are very happy that this is showing in our results.
Well, you've got that non-interest income target sitting at between 25 and 30%. Where are you at this stage, so we get a sense of the gap that needs to be closed here?
We're about 22% now, and so we're increasing our financing into the areas of trade finance, essentially. And we're also improving the quality of our services so that customers are happy to pay our charges. And we're also moving into the sphere of advisory services. And when you provide good quality advisory services to customers, they are willing to pay. Lastly, let me just finish it. Lastly, customers' ability to pay your fees are also a function of the level of services that they receive from you. So from all fronts, we're also trying everything possible to improve the quality of services in our various outlets.
So you've gone through some of the endeavors you've made and also looked at some of the subsidiaries and how, the kind of growth we're seeing there. To what extent does the figure or those figures that we see today reflect any gains from First Bank's perceived high exposure to the interbank market specifically?
We have exposures to the interbank market, but that's not excessive, and it's just in line with our trend in the past. We do have a portfolio analysis, and we have clearly defined how much of our total assets will be in the interbank market. What you've seen is not arising from exposures in the interbank market, but increased penetration into the various market segments and increased share of customers' wallets. That's what has led to the increase in revenue, not deliberately from interbank placements.
So all of this, BC, then translating to what exactly when it comes to the outlook for the bank's full year results? Can you offer guidance on that front?
We promised a 15% return on average equity, return on average, yes. But what we have now is 19%. We still believe that we should be able to make the 15 to 18% that we promised at the beginning of the year. So I expect significant improvement in our profits relative to what we did last year. I'm looking at about 60 billion naira for the group. And that's what we expect to achieve.
When it comes to how much shareholders will actually be getting back, let's take a look at your dividend policy, because at the current price, some analysts project a 6.5% to 7% dividend yield for the full year, and that compared with 5.7% last year. What's your likely dividend payout set to become in 2011?
We have a dividend payout policy of at maximum of 60%. Maximum. So I expect at the end of the year, we'll be able to distribute between 50 and 60% of the profit after tax at the end of the year, in line with our dividend policy.
Of course, you're operating in an environment where we've got a lot still playing out in the banking arena in Nigeria. And of course, that deadline for the resolution of rescued banks drawing closer, and several banks have been, positioning themselves in the merger and acquisition space. What's your view on how the rules of engagement within this sector are set to change?
Clearly, the consolidation exercise will be a game changer in the banking industry in Nigeria. But don't let us forget also that the consummation of those relationships themselves does not necessarily mean that they would lead to increased market share. It's a function of how well you are able to integrate as an acquiring institution. But be that as it may, we in First Bank have a deliberate strategy of driving our organic growth aggressively. And that's what we have seen. We moved away from the earlier transaction and we focused on organic growth. In 1.5 years, we've been able to grow our total balance sheet by 35%. We will continue to implement strategies that will defend our leadership position in the market. We would also extend our lead during the current financial year to become the most profitable bank, and we would also extend our lead in terms of being efficient in customer service. In addition to that, we will make sure that whatever it takes, the customers and the businesses that we have gained today are retained irrespective of the changes that take place in the market. We will not just retain them, but we will continue to lead in the market and extend our lead in the market. So we are not bothered, and we are ready for everybody in the market.